Hey guys, Alchemist here. So welcome back to another trade recap. In today's video, I will be breaking down this trade that I took last Tuesday, the 28th of March, and here's the MT5 slip to confirm. So let's now clear all the charts. We'll jump onto a blank weekly chart and I'll show you how you could have got involved as well. So as always, we will be starting off with a blank weekly chart. And in terms of our weekly supply and demand, we had this weekly supply, which we did tap into, take the liquidity above here, which was acting as inducement. And we have now actually closed below this flip zone with this inside bar. The close of it was this low here. Therefore, the new sort of demand zone that we're going to head towards is this one here. Now, I have actually changed my supply and demand zones to all be one color. So please let me know in the comments if you prefer it this way or if you do want me to use the gold demand zone as well, just so you can differentiate between the supply and demand. I think this way just looks a little bit cleaner on the chart so that we don't just make the charts a bit too messy. But let me know your comments below. And if you all hate it, then I will potentially for YouTube still just use the gold ones for you guys. Now that's all that we need to do on the weekly time frame. Then we'll go down to the daily. The daily is still the same range. It's been such a long sort of daily range that we've had at the moment. And we haven't really had too much of a significant bullish pullback at all. So we have had a significant enough pullback to confirm the daily low, which was at this point here. Sorry, the next candle here. But since then, we haven't really retraced any higher into this daily range. So that there's our daily low. And the highest point above the daily boss is going to be our daily high. Perfect. So again, that's all that we need to do on the daily time frame. We don't need to be marking out POIs or anything like that when we're looking to enter on the 1 minute. We'll go down to the 4 hour. On the 4 hour, again, we've had the same range for a long time. It's been over almost 2 weeks now. And this here was our 4 hour break of structure. The highest point above is going to be our 4 hour high. And the daily low is actually also our 4 hour low. So I'm going to change this to daily plus 4 hour low. Just going to make this a solid line instead of a dotted line, just so it's equal. Beautiful. I have severe chart OCD recently. And so this here is going to be our 4 hour range. So this here is going to be the highest point. This is going to be the lowest point. And in terms of POIs, if you have watched last week's video, if you haven't, I will post a link to it in the top right hand side corner now. And if you have, you'll see that the POIs are pretty much still the same. We have this one here. We can see this here, the top of this week, we swept above, but we haven't actually had a body close above here. So this here, we swept the liquidity above this high. In terms of demands, we had this one here, and then you can see, of course, it failed. And then price is now reacting from this lower wick. Okay, again, we have swept that, which is potentially the liquidity that we've used to initiate this bullish pullback here. And in terms of supplies here, we have this full body candle. You can see the lower part of this wick was mitigated by this wick here, but the body itself is what we actually tap into a little bit later. And then of course we have all the way down here. We'll just take the unmitigated portion of this demand, and we have the unmitigated portion of the extreme. Perfect. So on the 4 hour, we can see that momentum is definitely bearish. We had a very, very large impulsive push down. And when we compare that to how we've reacted, we can see that this has been very corrective. So this has been impulsive and this has been corrective. So essentially what price is doing here is it's pushing down very aggressively. And then we're having this sort of corrective pullback. And when this occurs, a lot of the time what the market then does is flow again down to the downside for another corrective pullback and to continue that sort of pattern onwards. You can go ahead and backtest that on your charts and you'll see how effective it is. So when we do have this corrective pullback, we are expecting price to break out of this range and hopefully take out this daily and 4 hour low to continue down to this weekly demand that we saw at the beginning of the video. So that there's going to be our 4 hour range and our 4 hour POIs. We'll go down to the 15 minute. On the 15, we also had a very, very large range. So our 15-minute break of structure was here. Leaving our 15-minute high to be the highest point above here. Again, if you are new to the channel and you haven't watched my market structure video on how to map your 15-minute market structure, I will leave a link to that above here as well. So it's going to be our 15-minute high. And the 15-minute low is just going to be the lowest point below here after we had a bullish pullback greater than 22 pips. It's going to be our 15-minute low. This here is that 4 hour range. We'll just make it a little bit lighter because we are going to use 15-minute supplies within here. And then we can drop our premium and discount. You can see we have this supply here, which we're currently tapping into. Potentially we sweep. Let's see if that is to be the case. There's our 4-hour range, sorry, our 4-hour supply. In terms of the demands, we do have a demand chain building from below. It is quite weak, meaning that each time we do tap in and mitigate the previous demand, we're not really having an impulsive push up. It's sort of, again, just corrective and really small pushes. Again, here we can see this week, we would have swept the liquidity below this low, and we didn't really have much of a significant bullish pullback. So again, looking at the impulse to corrective natureness, we can expect that all of this is then going to fail as well. Okay, and we don't really know where the next demand is going to be here. So I'll zoom in a little bit for you guys. So the trade that I took was off the next 15-minute candle. So at this point here, this is 2:15, which is in the middle of the Asian session. And then I will go down to the 1 minute. So price has now mitigated our 15-minute demand, sorry, our 15-minute supply. And then we did have one of the liquidation models that we like to see, which I'm not going to get into in this video here. And then of course we need to wait for our 1 minute change of character. Perfect. And with those 1 minute change of characters, we need to see a body close as per the strategy at Millennial Wealth Group. And there we go, we had it there. Okay, and you can see that this was the line that I was expecting to be swept, which was the actual 4-hour supply. So this here, the upper wick of this 4-hour supply, we did sweep that, and we can see, of course, we did have a very, very nice reaction with these tweezer tops, or these two shooting stars with the large wicks above, signaling that price has reached up for that liquidity, and we can see a lot of impulse down, which is exactly what we want to see when we want to be taking a short off of this price action here. Now, in terms of a flip, we do have this here as a flip. Okay. This flip, however, has not swept liquidity and does not have inducement. So I was looking to enter off of this candle here. I believe my entry was 933. I will just put up the MT5 stat slip, sorry, again here to confirm. I believe I had a 2.5 pip. I'm not 100% sure of the stop loss. I will also post that here so you guys can see that. Actually, I do have the position saved in my drawings here. I will just pop open that position just so that we know exactly where it was entered. Okay, so let's just have a look. So it was 933 and until 959, which is 2.6 pips. 2.6 pips from 933. I will hide all of these again. So 2.6 pips from 933. And the reason why I did cover the high by so much was spread at the time was about 0.4 to 0.5 pips. So I did want it to be entering off of this POI. I wanted to cover the high of this by at least 0.3, but I also needed to factor in spreads. Therefore, I've had to have a little bit of a larger stop loss. But again, it didn't matter in terms of our targets. As long as we are able to make 5R, if 5R is on the table, I'll happily take the trade. So let's now see if we do get tagged into this one. Takes a little while. You can see we've now built inducement. And then price does come back up quite nicely. Stops a little bit close. There we go. At this point here, we're tagged in. And if you are a return viewer, you'll know that I always take my partials at 4R, which I will use 25% of my position. I will close out just so that I can cover my risk and be risk free on the trade. So there is 4R. So this is where, when price arrives at this level here, where my trade assistant will automatically take off 25% of my position. Now, in terms of targets, we will always be targeting 15-minute zones, of course. And the last demand that I had as unmitigated was the lower portion of this wick here. We can look at this on the 1 minute in just 1 second. And I'll show you as to exactly where I refined it to. So I could see I had this one here as inducement. And I refined it to this candle here, just below. I think it was 788. Again, I will just confirm exactly. You can see as well in the slip as to exactly where it closed, but let's just bring up this again. So it was until 788, perfect. So this was for a total of 5.58R. So we get tagged in here. I'll just go full screen again. And it was quite a nice reaction away, right? So this is exactly what we want to see. Price mitigating, taking this liquidity here and pushing away very aggressively. As well, of course, at this point here, I have set alerts at 25%, which will just say partials taken, and I'll set an alert as to where my stop loss is and leave the charts. That's the one piece of advice. If you take anything away from this video, please do that. Don't sit there and try to micromanage your trade on the 1 minute or move your stop loss or close your position early or anything like that. Trust in your analysis and just leave your trade, set the alerts, and then go and do something else. I actually find that I'm most productive when a trade is on and I go and do something else because I know I don't want to check my phone. I don't want to check the computer, so I can go and work on something else. And then I will just play the price along. So yeah, at this point here, if you were monitoring your trade and it came back all the way here, you might be scared and you might close your position at break even, which would then of course lead to you losing out on the trade or not making any money actually, because you would have closed it at break even. Whereas if you had just left it and had your alert set, you know that in the end, it does go to our take profit. It did take a little while, this one. Again, at this point here, this is where the Asian market closes. So it's at 4 p.m. Sydney time, which is just after I entered the trade. I don't enter trades after 4 p.m. So this one was just before. So it was lucky that I was still at my computer and ready to strike. And then at this point, it takes a couple more candles and then our partial will be taken. No, actually it did get really close and then it went all the way back up again. So that's one of the reasons why I don't like trading between sessions. So when the Asian market closes and before Frankfurt Open, because there is low volume and low volatility in the market. So I like to, if I don't enter the trade before 4 p.m., I will then wait to at least Frankfurt Open, but ideally London Open as well. Again, if you were monitoring your trade, seeing all of this, you'd be driving yourself crazy. And this is why I don't like trading between sessions. But again, I wasn't at my computers watching all of this. I just let it run. At this point here, you can see your partial will be taken off. Or in the next candle, if it was because of spreads, there you go. And then the remainder of the trade does go to our take profit very nicely. So there you have it. So there's 5.58R. And again, our target is only 5R per week. We risk 0.5% per trade, meaning 5R is 2.5%, meaning we can earn 10% per month. Therefore, we can pass any funding challenge out there so that you can continue to scale your funding and use that to continue to grow your own personal accounts as well. Rather than trying to, after you've become successful, rather than trying to succeed in making 10, 15, 20R per trade, I find the best way to do it is to just continue targeting that 5R per week and then just scale your capital, which in turn obviously scales your profits. So if you have any questions regarding this trade here, please do leave them below. I have noticed as well, the YouTube interaction has gone down a little bit recently. So if there's other content that you'd like to see, please do let me know what you'd like to see in the future. And again, I will just announce that I have actually made the Discord group free with all of my outlooks and everything like that. So the link will be in the description below if you wanted to join that Discord group, where we will be hosting a live webinar in the coming week or so as well. So if you have any questions, please let me know. After taking this win on the FTMO, I did have a couple of losses. Account is still up, and this is now a fresh week, being Monday, the 3rd of April or the 4th of April. So I will keep you guys posted by the end of this week as to how the FTMO is running. Thanks, guys, and I'll talk to you soon.